are still going to be discussing the reasons why we are very bullish on all types of energy, but most especially clean and renewable energy. So let's discuss. In the next 2 weeks, the country's top leaders are going to have a global climate summit. It's the COP26. And China will, of course, put energy security first while also doubling down on renewables. What this means is that it will not really step down on their Sinopec or their PetroChina, but that doesn't mean that they will only support one type of energy. What we are seeing here is that the world, most especially China, needs all types of energy, and they've laid out all the contentious path as the world's biggest emitter is trying to also zero out pollution. So so President Xi Jinping and Premier Li Keqiang painted a portrait of a country that needs to put national security, including energy shortages and development first, as it does pursue a green transition. Country is putting huge investments in its world-leading renewable energy sector, while also continuing to support even the fossil fuels that comprise the bulk of their energy today. Every economy trying to reach net zero still faces that challenge. How do you maintain energy security? How do you move away from dirty fuels when you are actually also under special pressure? They are still the largest emitter and no solution right now for climate change. Right now, what we do know is that Chinese policies are all aimed at easing the electricity crisis, and renewables are standing to win. So there is a clear trend: renewable power generation and consumption will always enjoy support from the government, which is critical when you're investing, most especially in China. It should not come as any surprise why the likes of 1211, 1772, 175, 968, 916, 2208, those sticker symbols, 2333, those sticker symbols are all related to renewable energy. And those are the sectors that we will only support. Okay, take note as well the following things. All Awesome10X investors know wind and solar costs have fallen and continues to fall. Just like how all of your cell phones became so cheap such that 6 billion phones were able to penetrate the entire world, so will wind and solar costs become. Because the panels are dropping another 50% in the next 11 years, and weighted average cost of electricity for the G20 countries from offshore wind would fall by almost 50% from 2019 levels to 2030. Onshore wind will go down to about 45%. Utility scale solar photovoltaic will be down to up to 55%. And concentrated solar power will fall down by 62%, giving significant cost savings. This is the American dream, but this is actually the worldwide dream. Cheaper and cleaner and more profitable returns. Cost of electricity, this came as a report from IRENA. Solar photovoltaic and concentrated solar power, onshore and offshore wind isn't just falling down, but they're actually at the historical all-time low levels. Indeed, not only are renewables the cheapest source of new electricity today in majority of the world's countries, but prices are so low, they're even undercutting just the marginal cost of operating existing worldwide coal-fired power fleets. So it means that if you were to maintain your existing coal-fired plants, let's say you had to spend $1 billion, you could actually just spend $1 billion in solar panels and wind power, and it would have been cheaper. So electricity costs from renewables have already fallen so sharp over the last decade, driven by improving technologies, economies of scale, increasingly competitive supply chains, and growing experience. So as a result, renewable power generation technology have become the least cost option for new capacity in almost all parts of the world. This is a definitive Awesome10X secular trend. You cannot alter this trend. You can actually not change that the future is electric. Therefore, every portfolio in Awesome10X has a full tilt scale on solar power, solar and wind. In 2019, 56% of all newly commissioned utility-scale renewable power generation capacity provided electricity at a lower cost than the cheapest new fossil fuel-fired option. 9/10 of the newly commissioned hydropower capacity in 2019 cost less than the cheapest new fossil fuel-fired option. as did 75% of all the onshore wind capacity and 2/5 of all the utility-scale solar photovoltaic. This is a remarkable feat given that solar photovoltaic used to cost 7 to 8 times more than the cheapest fossil fuel option last 10 years ago. So auction and tender results tell us costs for solar and wind are still going to fall 2021 and beyond. For instance, all the auction rates right now have won recent auction and power purchase agreement processes, and this is commissioned in 2021 for just an average price of 0.039 per kilowatt hour or 3.9 cents. This is more than 20% less than the cheapest fossil fuel competitor, namely the ones offered by coal-fired plants. When you say PPA, that is already a fixed price that these solar plants are committed to give as a generation of utility. So with the auction data suggesting that the global weighted average LCOE, or levelized cost of electricity, of utility-scale solar photovoltaic and onshore wind potentially set to fall to about 3.9 cents and 4.3 cents in the 2021, new renewable power projects are also cheaper than the marginal operating cost, increasing existing coal-fired power plants. Data on marginal operational cost, this only helps this entire world to keep on investing, and it's going to be a main topic on the climate summit. So cost reductions are continuing unabated until the next 10 years and beyond. The global trend has been discussed in all reports, future of wind, future of solar, and you'll see that the results are very stark. So 55 to 62% drop for solars, and that is a meaningful data for us to actually significantly invest upon over our portfolios. So by 2030, take note, this is what's happening. Onshore wind going down 45%, solar photovoltaic 55%, concentrated solar power 62%, offshore wind 50%. This is a great reason why, for those who are invested in Siemens Gamesa renewable power, we are seeing a long-term reversal move for perhaps General Electric, super strong waves for Vestas Wind Systems, Longyan, China Longyan Power, Jinko Solar, Canadian Solar for solar. Basically, all of your solar companies are in a strong uptrend. Cost reduction drivers continuing forth. You've got, of course, technology improvements. Just a few days ago, we've already seen the Bill Gates backpack, which is ESS, ticker symbol GWH, already contribute battery storage conveniently for 12 hours of battery storage, with that battery all coming from renewable sources. It's just using iron, salt, and water. So even if lithium is very expensive, this is a great solution to actually take a look upon, as global demands for batteries will just keep on running high with all the demand of EVs. So notice too, so constantly evolving innovation on the solar and wind power technologies. We're incorporating driven innovation. So we've seen actually, for instance, if you remember, if you studied first solar was using carbide thelum, which really increased the solar PV module efficiency. So you're actually able to reduce cost, and then you're also getting more efficient. This is driving down all the installation cost, and it's very helpful for first solar. And I would say the same things are happening. The innovation is happening, automation for Canadian Solar, and even SunPower's Maction itself, even Jinko Solar. That's why they can keep the price going down and still maintain profitability. Reducing operating costs. So you could see you can reduce downtime, maintenance intervention, component replacement costs. These are driving down solar panels down 50% as a cost basis. Improving performance and output, and in general, economies of scale. As it becomes cheaper, more people will buy. As volume goes up, then these solar panel producers can keep on producing more. This just tells you why we are so bullish and confident on First Solar, American's largest solar company, Jinko Solar, China's largest, and Canadian Solar. These three are gonna all-time high. Growth in project size, more commonly in recent times, so a lot of auctions. Take note too that with a rising climate-linked instability, this is becoming such an urgent need for every country, whether they like it or not. US intelligence is already showing that climate change is already exacerbating all the vulnerable people to flee the hard-hit region. We're actually seeing some countries become so hot that it's triggering a lot of hurricanes, disasters, natural problems. So the Biden administration is committing more aggressive greenhouse gas emission cuts, migrants to flee climate-ravaged regions, as administration says. Biden White House is already preparing for the UN Climate Summit in Glasgow, Scotland. So this is going to be a very huge summit, COP26, and they'll all discuss about how they would address energy shortage, clean energy crisis, which means that for now until the next 2 weeks, even the next short-term catalyst, it's a good catalyst, short-term and long-term, because all the world leaders will commit and double down, triple down all their commitments for a decarbonized world. Also a good thing to say, Tesla hitting all-time highs is only going to continue further. It just continues the entire sector to keep on rising. Administration is outlining all the risks of a warming world. So we all know that the climate change is for real. It's not a hoax. So we are all boiling frogs that could suddenly die if we don't address this issue. You're also seeing IAEA calling for a ramp up in nuclear investments ahead of a COP26. So you're already seeing a lot of uranium stocks worldwide rise 40-50% in just a month or less, simply because of more commitments by the world to increase all the uranium and all the investments in all things nuclear and hydrogen. If you notice, F-Cell, Plug Power, Ballard, Bloom Energy, those rises are not going to be fake. Any dips will continue to get bought. We're talking about continued strength in all renewable, but including actually even fossil fuels. Because at the end of the day, energy security is a must, and the world actually just needs energy all throughout, even the likes of fossil fuels. So let's read this. As we are heading towards COP26, this is the Climate Change Summit in Scotland. It's time to make evidence-based decisions to ramp up investments in nuclear. The cost of not doing so is far too high to bear. We're actually seeing a 10-year, perhaps bear market reverse to a bull market for nuclear starting 2020. So this until 2030, guys. The special report is highlighting nuclear's power critical role achieving the goals of the Paris Agreement and Agenda 2030. France's EDF is offering to build 6 nuclear reactors in Poland. Reactor pressure vessel is now being installed at Bangladesh's first nuclear plant. I don't know if Philippines will actually reignite nuclear plants, but we used to have a nuclear plant in the Philippines. I think that was the Bataan plant. Okay, during Marcos time, 1970s. The 1970s, 1980s. The report was purposely launched in the lead up to COP26, emphasizing reasons why nuclear must have a seat at the table when all the energy and climate policies are discussed. So we are seeing actually, so far, Canadian nuclear names, Australian nuclear names. So for your information, take a look again, CCJ, DNN, Denison Mines, you got UEC, URG, URA, URNM, Paladin in Australia, PDN. Those are really important stocks for a lot of Awesome10X investors. Over the last 5 decades, nuclear power has cumulatively avoided emission of about 70 gigatons of carbon dioxide and continues to avoid more than 1 gigaton of carbon dioxide annually. So nuclear power is really vital. Therefore, uranium, which is the fuel for nuclear emission, is needed, ensuring a 24/7 energy supply. While uranium is actually abundant, the emission, which is a certain element, UR245, they call it that, it's quite rare. So it's actually triggering the increases in uranium prices all throughout. So far, I think the ETF, example, uranium ETF, URA, it's up from $10 to as much as $30 so far, or about 3x from its lows. And the thing is, it could continue higher, going to about $40 and $50, non-stop increase. Any drops near 25 or for URA is still a buy. Nuclear power provides stability resilience to electrical grids, facilitating the widening adoption of variable renewables. So we're actually seeing the world adopt many solutions here. It's not just coal, it's not just wind, not just solar, but also nuclear, hydro, fuel cells, also hydrogen. So we're really seeing a lot of investments now in a lot of hydrogen fuel cell projects, triggering the potential breakout further and continuation of Plug Power and FCell. Same for Ballard and Bloom Energy. Nuclear power is representing the most effective investment for a post-pandemic global recovery. It's a significant driver of growth, jobs, a transition to clean energy, and is well prepared for all the challenges by climate change. Okay, so you're seeing the same thing. This is what's happening. As of September 2021, the world temperature already increased 1 degree Celsius. 75% of carbon-free net power in Brazil, most recent data. As of quarter 2 2020, we've invested worldwide a measly sum of $70 billion. You can see general inequality is making it hard for very poor nations. If you're a less developed nation, as the planet is heating up, you'll have more disasters, more typhoons, more hurricanes. It's going to lead to worldwide problems and migration. This is what's happening in the poorest nations of the world. Notice Nigeria, Ethiopia, Pakistan, versus climate change and electricity consumption, China, Europe, India, Brazil, Indonesia. So this one is really getting hardest hit, especially Nigeria. So the increase in climate change impact, basically what this is saying is that they're already poor, they're gonna be even poorer because of all this strict difficulty with electricity. It's like telling me if energy is such a shortage, they'll always have brownouts in Nigeria, in Ethiopia, and Pakistan. Now, obviously, the biggest investment that even Bill Gates is saying in several webinars is that in a virtual climate tech summit, he said that there will be at least 8 to 10 Teslas. Well, Tesla right now is $1 trillion. So what he's saying is that you'll get an Amazon, a Microsoft, a Google. For those who are not informed, investing in Amazon would have yielded you 1,000x. It's not just a 100x or a 10x investment. So you would have made a huge return if you can really find who's the next Tesla of the tech space, of the climate change space, ESG space. So of course, if you cannot afford risk, you don't want to go here, because definitely investing in this ESG is still rife with several SPACs, several booms, several busts, several risks. Either way, there's a lot of technologies that are being invested by Bill Gates himself through breakthrough energy ventures. We know that Bill Gates invested in QuantumScape, which is a solid-state lithium battery. It is really to address the demand that lithium-ion batteries cannot actually capture because you only have one. Now, they're also invested in a battery venture company called GWH. The name of the company is ESS. It's using iron, salt, and water, or renewable safe materials, to essentially store energy for at least 12 hours. So that was already proven, and those were already funded by Bill Gates and SoftBank Vision Fund. So we are looking at those. China's Xi Jinping, even in policies, in the policy of politics, they are saying they need to secure all the energy in their own hands. Because currently, if the energy supply is going to be impeded by Russia or any other country, is going to have difficulty, given China has a lot to consume and they need a lot of electricity for their worldwide production, manufacturing. So they said, Xi Jinping assured all the oil workers that they would secure their own energy, signaling a continuous role for fossil fuels. This is actually helping meet all the oil and gas to meet all the power demands. Take note that in the US and even in the worldwide scale, we're still relying 80% on fossil fuels. So we're still that's why you're seeing Chevron, ExxonMobil, British Petroleum, even Australia, Canada, the world is still relying so much on coal, oil, fossil fuels. She made this remark in the People's Daily newspaper, where the oil field operated by Sinopec is largely operating in. So this only tells you that you're also invested in the big fossil fuel names like PetroChina, Sinopec, 857 and 386. You are well in the support of the government as well. So Sinopec already positioned itself as a national leader when it comes to developing hydrogen as a clean energy source. The 3 big oil companies in China are going to report next week, where usual attention would be how much it will spend in light of the energy crisis that it has already had to do as the world's #2 economy. China's leaders have been seeking to minimize disruption as energy crunch continues to roll around the world. $80 oil, a lot of natural gas, coal price spiking. So we actually saw China started to curb the coal prices last week, talking it down. That price talk made coal price speculation fall about 12% week on week. But still, though, that was just considered profit taking given the huge 100% move in like less than a month. So you've got really a lot of momentum still on the upside for commodities, energies in general. Now, Premier Li Keqiang vowed to ensure power supply to factories after saying a path to greener economy still needs to be underpinned by a stable supply of energy. What this only means is that they're going to do, they can't do 50-50 immediately. It's probably going to be 80-20 until 70-30. So it's a gradual shift to clean energy. You can't just automatically hit the 80% renewable and 20%. You can't just move away from fossil fuel that immediately. Also, I think most people do not know that Google's actually investing heavily on all things clean energy. So in the issue 5 of Bloomberg Green, fall 2021, says here that Google's biggest moonshot, you've got dragon scale solar panels, the cleanest cloud, geothermal heating, cooling, emission-free commuters, no offsets used. Let's take a look what Google's Sundar Pichai is really doing for the world when it comes to climate change. So this is an interview, and in one clip of the article I read from the Bloomberg Green interview, this is what Sundar Pichai has to say. There are moments that I get optimism, feeling that there is a tipping point. The generation coming up just fundamentally views this as a different priority. That gives me long-term optimism. The anxiety will come from the fact that we know scientifically we're already in a very dire state. That is the urgency. We're boiling frogs. But I look at what happened in the last decade. I gave you the wind and solar example. How much it changed 10 years ago, more than even what we expected. Looking at electric cars 10 years ago, I'm sure there was just speculation as to would this ever happen. Imagine yourself 10 years ago, would you really believe in electric cars even when Tesla Elon Musk said so? So now I don't think anyone would question that. Cars will be electric. Future is electric. The commitments are underway. The transition is happening. And just like that, I see efforts underway in all areas. That gives me optimism. Indeed, guys, in 1997, I was telling people, if you were investing in Amazon on online shopping, it was quite hard because we were in 56 kbps. Our modems were not even doing well. We didn't even have cell phones. If you ever thought that mobile phone was normal, mobile phone happened mostly 2007 era. So you would actually believe in online shopping and online streaming when 3G happened, not when we had a very bad internet infrastructure. So the same thing is happening. It took a decade. So it took a decade for wind and solar to prove to you that obviously it is the only way to go. But the next 10 years are where the easy money is coming from. The easy money from Amazon didn't come from 1997 to 2007. It actually happened more in the 2008 to 2021. That was where the easy money of Amazon was, even for Netflix. Actually, the easiest money for Netflix happened around 2010 to 2020, because that's when proliferation of internet on your mobile phone, video streaming. How many people will actually not pirate anymore simply because, well, it's so cheap and you can just, instead of downloading, you might as well just pay a $10 subscription fee for Netflix. Even when during that time, Netflix originals only came out 2013 beyond. So don't tell me that it was like 2013 that things happened. Yeah, in a way, because initially Netflix had problems with Quickster. But you could see that a technology would become S-curve and adopted heavily when you have everything in place. For Amazon, it took credit cards, online shopping, Visa, MasterCard, very easy cashless transactions to really pave the way for online shopping. Now, you have no reason to actually not believe that electric transition is the way to go. So anyway, tonight you've got it's likely, I'm not sure if it's tonight or maybe next week, but we're likely gonna see Tesla hit all-time highs yet again. It's gonna be another pinpoint where the markets will actually push again all the electric vehicles as a whole, as a sector, whether it's the SPACs like Lucid Motors or even Chinese companies like XPeng, NIO, Li, just as what's happening already with Chinese cars, even if it's not yet super strong. I mean, from a sales standpoint, they are still less than 3% penetration rate. They want to go 7% market share for the overall world. We're talking about less than 7% penetration rate in terms of electric vehicles. You know that investing in such is too early, and any drops in volatility are really supposed to be just bought and averaged and staked all the way until we transition for that electric world. So it's like investing in Apple when everyone else didn't have a smartphone yet about 20 years, 15 years ago. So Google's biggest moonshot is the search for a carbon-free future. Google's data centers today is powering billions of web searches, emails, mapping the routes in your Waze every day. Most of the electric consumption is Google's data center. I was actually surprised with the data that Google's, as one company, Google, Microsoft, and Amazon is similar to the entire Arizona, I think, entire consumption of one entire city. So they're accounting for 15 million megawatt hours as of 2020. Now, Google met 67% of their data center electricity needs with renewable sources on an hourly basis. This is a 6% jump from prior year. Data centers in Oklahoma or Oregon run 90% above clean sources. But getting off the carbon is a bigger challenge elsewhere because there are countries that don't have clean energy sources. Google is aiming well beyond just a typical corporate target. They want to pledge and reach carbon neutrality with renewable resource or offsets. Offsets would be credit companies that buy if for every ton of emission that would have polluted the atmosphere so that it could go towards emissions reducing projects. So basically, if you are a pollutant, your profits or a portion of your profits have to pay off like a green energy company for a subsidy for that electric because you are polluting the carbon and then the other one is lessening it, right? Or reducing it. So far, Apple achieved carbon neutrality with their own operations and they vow to do the same with their supply chain by 2030. Amazon also promised to carbon neutralize by 2040. Google aims to go even further, to go free of carbon without using offsets, purchased in all their locations 24 hours a day. This means in Chile, where solar panels are powering Google's data center all throughout the day, the company must find a solution when the sun is set down. So in Taiwan and Singapore, all the data centers today are still running almost entirely on fossil fuels. It needs to find a massive amount of green alternative very quickly. So Google has the cash. We're talking about $135 billion of cash on hand. And they want to buy all clean energy available in the world. So if you are a producer of clean energy, you'll have no problem getting a client. This is the North Sea Wind Farm that helps power Google's data center in Saint Ghislain, Belgium. The biggest buyers of contracts of Vestas wind systems, for instance, is not a personal residential home. It's corporations, it's countries. We're talking about Japan as a partner of Canadian Solar. So the biggest customers here are countries buying it up. In this case, so Belgium, you're seeing all these oceans with wind turbines situated approximately 23 kilometers from the Belgian port of Zeebrugge. This is actually what they call the dragon scale solar panel. This is solar panels all throughout. This is the office of Google campus in Bay Area, San Francisco. Take a look at this statistic. The annual electricity consumption of all the households in the US. We're talking about 300 million Americans. That is 60 million megawatts. Now, Amazon in one company is 24 million. Google is 15 million. The state of Maine is 12 million. Microsoft is 10 million. Facebook is 7 million. If you ever wonder why Amazon, Google, Microsoft spend a lot on electricity, well, it's because of cloud computing. All those data centers are all needing a lot of electricity. If you've seen buildings without people, all with data centers running, that's Amazon Web Services, Google Cloud, Microsoft Azure. Most electricity consumptions right now are still not renewable. To hit the goal, Google is realizing on unorthodox procurement contracts in a grab bag of novel technologies with lithium-ion battery storage, algorithms that predict wind patterns, geothermal wells drilling into the Earth's crust. Microsoft is also following Google with another pledge to go carbon-free 24/7. If you ever wonder why Bill Gates, who's actually investing a lot in battery technology, it's because even if you can produce the cheapest electricity in India or in California or in Texas or in Abu Dhabi with just 1 to 2 cents kilowatt per hour, it's still going to be very difficult. How do you transport that? And how long can you use that? So you need battery storage. That's the reason why QuantumScape is a very strong component if you believe in an electrified world, at least fundamentally. So it's not about the earnings today. It's about the technology they have. Guys, while you're reading this, allow me to get like a cord because my computer battery is dying down. Just give me some, less than a minute, 30-second break. Wait up. Okay, guys, I'm back. I'm just giving you more conviction to hold on to your winners. Just giving you a lot of fundamental data. As you can really clearly see this in technical charts, why these are the strongest ones to bet upon short-term and long-term. So these companies are already worth trillions, Microsoft, Google, Amazon, and they're adding a lot of billions in profits even as the economy contracted. Most of that money that they are in is mostly R&D investing, mostly on AI, AI that would help them, artificial intelligence for helping cloud computing, but also using AI to find the best ways to conserve energy. So also, even in political era, this is an example of the US Department of Energy loan program. There's about $44 billion in clean energy funds that companies can make a loan for that would support innovation as long as your company is doing renewable energy and green tech. So, I mean, 2021, for all things said and done, and 2020, the SPAC EV boom, in my view, the boom and the bust, while people might actually say it's a bust, I don't think it's really winter club for the EVs in general, electric vehicles. In general, if the world really needs to electrify a bus or a truck, you will have a lot of people that will want that served. And not everyone is likely going to buy it from GM or Ford or Tesla. You'll have some people perhaps buying it from Proterra. You'll have some people perhaps buying from TSP, some people buying from Rivian. Too Simple, Rivian, Proterra. I do believe that there are several winners in this group. And from battery technology, yes, you've got lithium ion, but there's also battery technology in Norway through a SPAC called Freyr Batteries. So I'd say that there are several winners. Even in China, you've got Microvast, right, which is also a battery technology firm. A lot of companies in the SPAC field, especially the ones who are trying to solve batteries, in my view, have a fundamental core reason to be bought. So the valuation may go up and down like a roller coaster, but we will tell you to actually stay and hold on and actually watch out for the sector to actually start rampaging in. My view is that it will go above 10 anyway. If you have, like, example, I think Freyr, whenever it goes 8 or 9, you always have a lot of people looking to buy that. Same for Microvast. Also, this is another thing to understand. China, the crackdown on tech giants seem to be coming to an end. This week, we saw Jack Ma appear in public. He was in like a European place. And suddenly, just by that, people already bought up Alibaba another 10% for the week and up 20% for the month. It's about low of 130 for Baba and now trading at 175, 180. That tells you that there is a shift in Chinese sentiment, that although things have been bleak, the valuations are compelling. And if authorities are going to lessen the rain, or the rain in all these tech giants is coming to an end, then the market's already pricing in the less hangover move for China. So we'll see. Most of the time, what we're seeing right now is that indeed some Chinese tech names like Alibaba and Tencent have proceeded going up. We would view that any dips like 10% lower might actually not fall to a new low, but actually carve out a potential bottom for the next 3 months. So authorities have also so far identified 1,000 issues relating to fintech operations of 14 internet platforms. We're already seeing that they have rules for the fintech firms, for Alipay, for WeChat, which is WePay. We'll see, but obviously the market already assumed positive things happening on these sectors. Still, Guo, which is vowing to implement strict regulation to break up monopolies, says that in some areas of China's financial industry, the country has zero tolerance for illegal financial activities. Investors have seized on any sign that the nearly one-year-old crackdown in China, most especially for Alibaba, is now entering the final stage, snapping up, beating down tech stocks in recent weeks. Smaller than anticipated fine for food delivery giant like Meituan earlier this month suggested the cybersecurity agency is also wrapping up the probe on Didi Global, and this has added to optimism. Indeed, Didi Global went like from 7 to 10. Meituan went from about 230 to about 290. The Nasdaq Golden Dragon China Index is on track for the best month in a year. You can imagine all the losses that was happening for the last 6 months is now obliterated in just a single month. The regulatory crackdown is coming to an end, probably over the next few months. Chinese stocks are very inexpensive, very attractive, so a lot of portfolio value managers are buying up a lot of Chinese names. We saw Kuaishou, which is this like a TikTok, small competition of TikTok, actually rise from about 60 to 102, 65 to 102, about more than 50% for the month. You're also seeing Hong Kong tech shares beating China peers by the most since 2019. Hang Seng Tech rising on value, up more than 10% this month, led by Kuaishou. So Kuaishou and Alibaba actually moved 20% up this month. So the top contributors, even Bilibili, which is a platform, this had to do with celebrities and animes and a lot of live streaming, like the YouTube of China. You're seeing it actually rise, like and also earnings are coming out next week. So November, you've got a lot of good earnings results from these names that could actually trigger another potential short squeeze. Tencent, JD are also appearing on a lot of value screens. So we've got a lot of buyers of big cap Chinese tech. So this week, I had to share that there's a lot of movements. There are stocks that are falling down from a news-based format. The term is correct, Admageddon. So Snapchat started the earnings release with a negative 20%, triggering a sell-off on all of your advertisements. This was a result of Apple's policy changes. And just from that earnings release, almost all social media fell 5%, like from the likes of Twitter, Pinterest, Roku, and all the digital advertising related or high revenue bent on digital ads. So there's really a lot of risks still involved in the market. But I wanted to share that amongst so many sectors to really capitalize upon, Awesome10X wants you to be still on the long side when it comes to Generation Green. For ideas, you won't go wrong with the solars and winds, nuclears. So go forth and give you some ideas. Let's go through just 15 minutes of charts. Okay, let's just do this top of mind. You've got Tesla hitting all-time highs With Chinese regulation probably lesser nowadays, could this go V-shape? Well, the first assumption is that any dips would be bought. So NIO here about $39 is likely to hit first to 45. And when it breaks 45, likely to go to 56. Those who have cash on the side should go look at NIO because it's actually on the uptrend following the likes of XPeng and Li Auto. So we're bullish even on Chinese vehicles. XPeng already moved higher. This one is on the route to go 59 in case this breaks the previous 6-month high. Take a look as well for Li Auto. We're also bullish here. Previous resistance is 38, but with sales actually topping Chinese stocks. Actually, this is number 6. So you want number 6 in terms of monthly sales deliveries. So Li Auto is probably going up. Take a look at so 1211 has already rallied to all-time highs. This is already trading at 295. With these type of movements, the next resistance is 340 or 330, and then fall down again, but higher low. Perhaps 280 is the higher low. We just have all-time highs for 1211. We're seeing Geely Auto, of course, rallying very strongly. This is almost a V-shaped reversal from 21 to 27. Resistance at 29 likely, and then after that, all-time highs. We're looking at 2333, Great Wall Motors. So we are seeing a potential all-time high of the EV boom. So this is also nearing 34, the previous high of 37, just a few notches crawling up and then all-time highs. What's happening to all of your US? Same thing. Ford is nearing all-time, nearing all-time highs, right? So not all-time high, but this is a V reversal indeed for Ford. The closest high was 18, which happened around 2014 or about 7 years ago. A break of that goes all-time high for Ford. General Motors about to go momentum as well. The next resistance in my view is 74. Although if you check this actually after 63, it's almost all going all-time high. Of course, when Ford, GM, Tesla are moving up to all-time highs, we're also going to take a look on some SPACs. So let's take a look on all the EV-related names. Look at your SPACs. Okay, this is Tesla. I have no question that this trend is upwards. So any dips on Tesla is still going to be bought. The dips will be muted here, perhaps about $860. The next trajectory is 950. And then 1,000, the round number, and then maybe 1,1. So you've got still super science strength of your Tesla, which will actually trigger all-time highs for the sector. So Tesla's moving up. Let's take a look even on the small ones. People have been asking me, Nikki, what about Arcimoto? This is a very bad earnings related to Arcimoto, but because the sector of FUV, is in the electrics, we might need to take a look whether this actually breaks to the $10, going to 14. We'll see. Lucid Motors has been doing well in terms of deliveries. So my view is that amongst the EVs, here about 24, does this have a chance to break 28? Even if it doesn't break 28, even 24 to 28 still presents you with a 20% upside. Let's take a look on some EVs. Proterra, as I said, Proterra is a SPAC. This is the electric bus of this is doing electric buses, so electric school buses. I have a view that this $8-9 is actually an entry point. So if you like electric buses, this is gonna be part of your portfolio. Take a look on another entry point on New. This is a scooter in China. Very good sales actually. So just like NIO, I'd say that this is more on the upside rather than on the downside. Because it is very near the 23 area, my view is that it goes 34. You've heard me talk a lot about solar. Let me give to you the strongest solar companies. First Solar nearing all-time highs, while others would argue valuation. I'm not that concerned on valuation. I think that the trend is going to go higher for all things solar. So you're about $100. You might continue to buy either stock or in the money call options. I think it's going to go 120 and beyond. Of course, when First Solar jumps up, Jinko Solar is also going to go up. So this is the Chinese largest, one of the strongest solar panel manufacturers. So you want to actually invest even on Jinko Solar. We're seeing actually that strong uptrend here. So these are all potential buys. Any dips at 52 is likely to go as high as 60 or 70. So you've got more upside than downside. Take a look on CSIQ. This is still a laggard here, but my view is that buy it as much as possible, 37, 38. We're going to see it 43 and 50. Japan contracts are well in there. So in terms of all the utility happening in Japan, it's actually being served by Canadian solar and a lot of countries as well, not just Japan, but also China. Let's take a look when it comes to installation. Enphase is going to be reporting numbers pretty soon. This is on October 26, which is next week. My view is that any dips on Enphase will be bought, and there will be no problem when it comes to earnings format. It's going to go another 200 to 220. So you want to buy Enphase on dips. We have a high conviction on all solar names. I'm talking what I have in my portfolio. Solar Edge doing very well. 200 is now trading 300. I don't see any material sell-off here. Any dips would be bought. As I said, nuclear, we're getting a lot of double down, triple down investments. What happened to your uranium just keeps on going up. This went from $10 already trading $30. And yet, I still think this is a multi-year bull market, guys. So this is went from $100 before. If you're going to go through as far as 2011, we're going to go back to the $40, $50 arena. Any dips on uranium ETF is going to get a lot of demand. Wind, I said, is going to be bought. So we have the VW Dry, aka Vestas Wind Systems. Vestas already rose from about 11 to 14. Any dips would continue to be bought. Or you want to get a look at GC-TI, which is Siemens Gamesa, also a big wind-related turbine. So this one, Siemens Gamesa, is actually a nice entry point here, about $4 to $5 if you want to enter that. We talked about China being very supportive when it comes to electric vehicles. We're also aware that China is very much supporting China Longyan Power Group. This is a wind power name. Could see this rally from $4 to $20. Every dip has always been met with a bounce. Here, like 1, 2, 3, 4, 5, 6, 7. Every dip has always just been a buy the dips craze for wind energy. Take a look on the same thing for solar. It's also a buy the dips. So every dip here and then here, here, here. So any dips near 15 is still going to be bought for Sinyi Solar. I'm also very bullish on Xinjiang Gold Wind. If you're looking at this, there's also a gold play. Gold play. This is a wind energy play. Yeah, so this is also going to be bullish. After a huge correction, we're in the bullish territory already. So I'm seeing this one will go up from 15. You can consider this going to 20. Of course, lithium is a big need for batteries. Notice what's happening with Ganfeng Lithium. We've been bullish here on any dips, and we don't see this reversing anytime soon. It just goes up 180, 190, 170. Although there's some resistance here, I think it's just all up. That also means that all your lithium miners, even in Chile, will go up. So Albemarle continues to go up. SQM, same thing in Chile, also going to go higher. Lithium, LTHM, also going to go higher. So it's just a high move. Does that mean we're bullish on silver? Yep, silver is a huge proponent in all your photovoltaic panels. We are bullish on silver. We are bullish on SLV Trust. This is just a direct mirror of silver. You can go to our Awesome10X green portfolio analysis on why silver and green belongs in your portfolio. It was a free class. Okay, so in general, guys, I'm very bullish on all things solar. Yeah, I'm also bullish on ARI and Maxion. So you've got actually ARI, which is now a laggard, but I think this is in an uptrend move simply because the solar space is very hot. Maxion, which is also a partner doing solar panels, it competes directly with Canadian Solar, competes directly with First Solar, competes directly with Jinko Solar. Nonetheless, even if you have a big competition, I do think that this one has a lot of buyers anyway, so it's going to go higher too. So you want to accumulate 19 below for Maxion Solar and Array, go ahead because I think it's going to go higher. Actually, I've been saying as well that GE, which is a General Electric, is actually in a long-term multiple reversal play. So GE also has a lot of wind turbine subsidiaries. So you want to see how this sector plays out. As we are very bullish on wind, this likely goes up. In general, metals, we are very bullish on all things metal. Solar, solar needs a lot of silver, also a lot of copper, lithium. So look at how copper futures are nowadays. How we are implementing our copper bullishness is through Freeport-McMoRan and Southern Copper. So right now, yes, you've got some slew of profit taking. You've got commodities, just really in a super spike boom. So this was a clear breakout, 700 to 800, and this is a dip that you want to actually enter into. So how do other people reenact the copper play? They either buy it through FCX. So FCX is the largest copper mine in the world. So looking to buy this $36 or any lower level. Also looking at SECO, around 64 areas I'm willing to buy. So it's 64 all the way to $60. Southern Copper Corporation. We talked about uranium being very bullish. Let's talk about that. This is DNN, Denison Mines. Any dips are going to be a great buying opportunity. So you could see all of the uranium mines are getting heated up to all-time highs. You've got Paladin, also the same thing, heating up to all-time highs. Dips at about 80 cents would be a buying opportunity. So lots of ideas, lots of bullish recommendations. Let me just give you a brief chart on China, given that there is a bottoming out happening in Chinese stocks. So let me give you a few ideas. Since we're very bullish on electric vehicles, I think that eVTOLs also has a lot of wins. Well, eVTOLs are your flying airplanes or flying taxis. These are solutions in a world where urban mobility is necessary. So you're seeing actually how many supports here at $20, 21, 1, 2, 3. So every time it falls 22, it bounces back. Now 26 is actually midway. It has a resistance partially here about 32 and 41. But given that the overall trajectory right now for EVs is going up, I'd say that even an eVTOL like EHang is also on the way up. So, for others, you might want to wait 25 below if you don't have EHang yet. Try to see if you can still enter EHang 24, 25. So let's take a look on Chinese names. So Baba is the spotlight, no? Up 20% for the month. You can see this huge move, no? From about 140 all the way to 180. What I'll see is that Alibaba is going to consolidate above 170. And if it does, then it has a leeway to hit 200. When that happens, of course, JD and Pintuoto will continue rising. Notice how outperformed JD has already gone. When Alibaba went 130, 140 to 180, this went from 70 to 90 or a 30% pop. So what's going to happen here is that JD will get a lot of buyers here about 79 and 80. And my argument is that Pintuoto is also going to go higher to about 112. So you've got that huge uptrend. I'm not sure if it will break 112 that easily, but we have a potential bottoming out formation happening there. We saw Kuaishou go up, so Bilibili, very strong movement, still lots of resistance at 90, but definitely this is a 50% range, 60 to 90. The next time Kuaishou falls again, which is a short form TikTok of China, you'll get people actually seeing this as a bottoming out journey. I'm not sure if it will actually trade to as high as 200, but likely we're just seeing a bottoming out here. So 60, 80, maybe the next bottom is 90. We'll see if a shallow drop happens here. But there is a potential uptrend forming or bottoming out or relative resilience of Chinese stocks. Nonetheless, since there are so many sectors, I still prefer going to the topic of green energy and ESG boom rather than speculating or value investing or doing bottom fishing up on a lot of Chinese names. So yun, lots of ideas, guys. Okay, SPACs as a whole, I will still wait. Yes, we've seen a very strong move today on, so we've seen like the Donald Trump have DWAC rising 600% from $10 to as much as $50 in a single day. So this is digital world acquisition. It is igniting a lot of money flow again with SPACs. So we saw a strong move on a shorted company, which is AGC. And this is, of course, a Southeast Asian unicorn. And we're seeing the first resistance, yes, you've got 12, but if you break 12, the next resistance is 15. Let's take this one step at a time, but I'm gonna be saying that I'm very biased. I have holdings on AGC. I think that it is worth a shot for it to go 15 to 20 if a short squeeze does happen. With look at that type of volume. This is a very strong volume. You'll see that here about 11, some people are still buying. Of course, with the risk that it goes a cut loss below 10. Either way, I think 10 to 11, there are still people buying for a potential move 12 to 15. Grab is a ride hailing, a payment play. So you've got a lot of people who are also looking to integrate buy now, pay later, even in Grab. So we'll see how things unfold. But it's a very good Southeast Asian fintech and ride hailing giant. Okay, as for Rio, I think that Rio had planned a $7 billion. They were planning to sell $7.5 billion worth of notes. That's why there was that drop. I was buying Rio Tinto at about $70. I made a cut loss here at about 67, 68 when I saw that news. But I'm not really bearish on Australia commodities as a sector. Actually, right now, the price of 65 is nearing the resistance before of about 65 to $60. I'd say that a support will happen on Rio Tinto, but we'll wait for the market to set us up for a support. But I don't see a long-term reason for Rio Tinto to fall down. Rio Tinto is, of course, benefiting from the rising oil and energy prices. Now, if you wonder why I cut loss, mostly because I don't like to lose 3 to 5%, especially when the market is running hot. Right now, the market is so bullish that I had to actually trim even my Roku at a loss. Not because I don't believe in Roku. I actually believe Roku is going to go 350 and 600, 400 and then 600 eventually. But with overall noise in the social media sector nowadays, I prefer to just make sure that even my short-term bets are going to go 40, 50% in the short term. So any 3 to 5% dip when I have it, I generally don't have time to wait because you just have a very bullish sector on a lot of movements in stocks. So your technology firms are still going up, your EVs are rising. I think that when a stock is lagging behind, I'm not willing to wait. That's just me. So Rio Tinto is not exhibiting the same momentum like uranium. So you can see CCJ hitting all-time highs, right? So you've got UEC, URG. So in fact, even for silver, when I was just like up 2%, 3%, I took some profits on my silver and copper, even if I'm bullish, only because uranium, I'm up a lot. Like, your profits on uranium is like 3 times larger than your profits in copper and silver. So I don't know. I guess I'm a little bit too impatient that I want a fast money quickly. So I've been moving most of my money in what is the fast money. And I think the fast money is solidly in solars and uranium, if I had to choose just a few. Yun, Miniso is a slow recovery, guys. Yes, that Chinese name is going up, but I think that is a slow recovery. So you still have resistance here at 18. If you have it here at 12 when we were trying to say a buy, given very good numbers, this is more of a reopening play, guys. It's not really a strong recovery. You still have a fragile, weak recovery for all your reopening themes. Nonetheless, this is a clear uptrend. So what you want to do when you have these types of names is you want to be selling if it has huge rips, especially like if it goes 18, and then you just support it on a higher low. Let's say it drops to 14. So that's how you'll play weak reversal plays like Miniso. Okay, thank you very much for watching this class and see you again next week for another Free Friday class. Bye-bye. Positive on ChargePoint. We're positive on all things, even EVgo, even the SPAC EVgo, we're positive on that. Sorry, because I had to answer because there's a last minute question. Because we're positive on all things EVs, even the likes of EVgo should go up. There was a question I forgot to answer. There was a question about Ouster. I think LiDAR firms will benefit when all the electric vehicles go up. It it's a little bit weird that you will buy up Xpeng and not think about who's the partner of Xpeng in LiDAR firms. So obviously you've got Ouster, Valdyne LiDAR, Innovis in the dumps. We are seeing a bottoming out, but the market right now is concentrated, hitting all-time highs on the large companies. So Tesla first, the NEOs first, so Polestar is GGPI, Gores Guggenheim. So this one is also benefiting from the EV craze. So watch out for these names, because I think that this has the chart and this is the narrative. They've got all the momentum as well. You need to make money in where the action is, because sayang, it's a bullish market. You want to be where the action is. Doesn't mean that we don't believe in the other SPACs. It's just that we need those types of bullish candles to get excited to buy and buy more. Okay? TPGY should be positive, but until I see a bullish candle, it's hard to say when it will reverse. But I'm very bullish on charging stations as a whole. Yeah. Hintay to. If you have it, just keep it. Kulang na yan. Baka mag 12 to 15 na yan. You can speculate. So some people who speculated on SPACs, they got rewarded naman eh. Because when you're buying here about $10, you don't have a lot of downside, no? Probably gonna go up to 20, at least 15. So yun. I'm bullish. I think after a 70% drop, it will have the drop from 32 to at least 16. So that's